going on YouTube? In this video, we're going to talk about Nike, ticker symbol NKE. So Nike just reported their, I believe it was Q1 24 earnings last week. When the earnings were released, the stock ripped higher, and there's a good bit of volume on that rip too. So it tells you there's a little, maybe a bit of commitment behind those earnings there. So over the course of year to date, this company is down 19.4%. Over the course of 1 year, flat. We're gonna look at Nike's financials, some comparables to Nike, go through the calculator to figure out a fair market purchase price on this company. And we have valued Nike before on another video. Take a look at that if you'd like, and we'll compare what we had for a fair market value on Nike last video to this video, which is only about a month apart, but this time we have different earnings. We had an earnings release, so we have different numbers, different analyst expectations and stuff like that to go off of. So numbers will be a little different than they were before. There's also an additional calculator that we have, the dividend discount model that we didn't use before, but now is incorporated into the calculations that we're using today. So begin at our financials here on Nike. Let's walk through them here. Let's see how they're looking over at Nike. So we have our revenue, our gross profit, net income. So our revenue is growing. Our gross profit is also growing as well. It's heading in the right direction. However, our net income is not. Our net income is going the other direction. So as we can see, in 2022, we are now heading lower on net income, even with higher revs. So our gross margin, we're sitting at 43.5%. That's about in line with where it's always been. So it is a little on the lower side, but so their gross margin is appearing to look like it's trending lower right year over year. Actually, in the trailing 12 months compared to 2023, it's flat. However, prior to that, it was at about 46%. So it's not huge percentage changes, but it is probably pretty impactful, especially when it comes to your net margins here, because you're only sitting at 10% net margins, and if you're going to be start trending lower on your gross margins, your net margins are likely to follow. So, but either way, our net margins are relatively flat here around 10%. Obviously, we had a couple dips on these 2 years, 2020 and 2018, and we can see it's about a 10% net profit margin company. Revenue and gross profit year over year change, relatively flat. Usually it looks like they've got about a 5 to 6% growth rate on them, and for an average. And this year looks like there's pretty much no growth at the company. And then this one includes our net income, and same thing, our net income is slightly down. Return on invested capital. I'm this one I really don't like to see this, especially in a well established company, that their return on invested capital overall is trending lower. Eh, Kind of a little bit of a concern, something that I don't like to see. I I always like to see 15% or more, which they're right there, but they're also trending lower. They've had a higher history of having a better return on invested capital. So kind of something to keep an eye on, I believe. Cash to debt on this company. This is just one of those companies that operates with more debt than cash, but looks like they're starting to roll back over, starting to get more, reduce their debt. Looks like their cash is also being reduced as well. We have our net cash, or our net income, free cash flow. Our net income is just barely above our free cash flow, which I am okay with. Um, Personally, I don't like to see bars like this where our free cash flow is higher than our net income. I like to see our net income higher than our free cash flow. That's just what things that I look for. So if we're above this, I want to know why we're producing more free cash flow than we are net income. Free cash flow on its own chart here, we can see is trending relatively slowly higher. It's got some ups and downs here, humps and dips in it, but overall the trend appears to be higher. Share count is getting decreased, so that's good as a shareholder. Our dividend is growing. Disregard this one because this has not included the most recent dividend payout yet. So this dividend will be more up here on this chart. So overall, dividend is growing consistently. So good to see as a dividend investor. Capital expenditures just kind of hanging out flat right around 1 billion price point there. So overall financials look, respectable for sure. So a couple key areas to keep an eye on, but for the most part, nothing too concerning. So now we're over here at our comps. We have three other companies to compare to. We have DEC, SKX, CROX. We have three red flags on this company currently. We have our return on invested capital and our return on equity currently are both below 15%. At least that these are the numbers that I search for in a company. Operating cash flow is higher than our net income by $800 million. Not a big number there, so I'm not overly concerned about that, but that is something that I would probably look into just to know why our operating cash flow is higher than our net income. So we got our charts down here comparing all four companies to one another, and we have our market cap here and revenue on the right-hand side. Market cap on Nike and revenue is destroying the other three competition or other three companies that we're competing against. So no concerns there. Revenue, gross profit, and income here in order. Revenue, gross profit, and income. I mean, same deal. I mean, this Nike's just leaps and bounds above all these other three companies here. Overall growth rate, they're all within the same ballpark. Obviously, the other three companies are a little bit better than in terms of growth than Nike. But they've also got a lot more room to grow as well. As we can see, Nike's already way up here. Nike's been around for a long time, so we shouldn't really be expecting a huge growth rate on Nike, but we do, however, expect a huge EPS growth rate, which we'll get to shortly, for many years at least, by the looks of it. So our gross margin, kind of low on the lower end of the bunch here. So not a horrible gross margin whatsoever, but just below the other three competition here, the other three peers. Operating margin, same deal, not ideal compared to everybody else, but still within spitting distance of everybody else. Profit margin, again, same deal. Our free cash flow though is just significantly better than everybody else. So everybody, even though everybody's got their better profit, operating, and gross margins than Nike for the most part, not everybody here, but most part, they aren't really producing much of a profit. So that kind of tells you how much potential pricing power Nike has compared to everybody else. So our return on invested capital is, respectable. The other two, Deck and Crocs here is overall on all these charts is pretty good except for our free cash flow. And then our PE, obviously Nike trades at a premium compared to everybody else. So we're sitting just shy of 30 PE. So in comparison here, Nike is kind of takes the cake for the most part. Obviously, it's not picture perfect, but overall it performs well across the board. What we're gonna do now is look at the 8K from their most recent earnings statement. So going back to that EPS comment I made about how their EPS growth rate is likely to stay relatively high for probably a few years. They have a $18 billion buyback program, which there's $12 billion left in this repurchase program. So that will continue to keep their EPS growth rate higher because there's going to be less shares to divide away from their net income that they're producing. As long as their net income stays consistent or higher, then it's going to show a EPS growth rate, right? Peter Lynch valuation, $54.55. We have multiple comparisons. That gives Nike a price tag of $53.88 per share. Our manual PE, market cap plus debt minus cash divided by cash from operations give us 27 and a half years before we earn our current market cap plus debt, really, minus cash. So that tells us Nike currently is overvalued. Our price to book over here at Nike is below our 5-year average, so by quite a bit. Peg ratio, because this is not a growth company, that to be expected on the peg to be, high like that. Grams valuation gives them $121.38 per share. Our dividend discount model gives them $96.15 per share. Discounted cash flow valuation, we gave them a growth rate of 11%. Analysts have a growth rate of 11%, which is what we matched. We have an average growth rate of 52.3% on Nike for our free cash flow. So we chose 11% because 52, we have our growth here for an average across the board, and we see there's 326%. It's very inconsistent. If it was more consistent at 50%, then maybe we'll split the difference between 11 and 52, but that is not the case over here. So in that case, we do give them discounted cash flow price per share $71.62. Rule 72. We have three different sources for growth rates on the EPS side of things. We have an average of 7.77. So that goes into 72 9.26 times. So we're going to take 9.26 and divide that by 10. Or, sorry, how many times is 9.26 going to 10 years? One time. So we're going to take our current EPS of 3.24 and we're going to double that one time to 6.48. So there's 6.48. So 6.48 future earnings per share will give us a fair value $25.19 with a purchase price of $17.63. So now we have our summary of all of our valuations we just went over. So we have 6 different valuation methods that give us an actual dollar amount and 4 other valuations that just give us other numbers to kind of base our analysis off of to see if, just a little extra data to go off of, right? So currently Nike's trading at $95.62. Our fair market value with all of our valuations we went through is $70.47. 30% margin safety is $49.33. And analysts have a price target of $125.25 on this company. I personally don't know how or where they're getting those numbers from. Um, that's why I do what I do and put all my numbers in, and you can see all those numbers. You can pause the video wherever you want, change numbers if you want, do whatever you want, right? And get the own numbers that you want to use. But I pull all the numbers from all these sources. I don't put hardly any numbers in. It's very all the everything that's yellow are numbers that I change. Everything else is just straight from all these other is straight from their financials. That's it. So now we can circle back. Now let's come over to the stock chart and take a peek at how the stock is trading. So since 2020, we ripped higher all the way up to $175 per share, and since have pulled back just in a just really to really pretty much a straight downtrend. Did go one a little bit of a bounce here, hit the top of the channel. Now it looks like I think we're headed back down to potentially retest lows and or to the bottom of this channel. That's what it looks like to me, which would get us pretty close to where our fair market price per share is around $70. So if we break through this channel, get down to about $70 per share, that to me is what this company is currently worth. And it to me, based on how this is technically trading, I think it's headed that way. Honestly, I don't think this is going to pop up higher, especially with the future economic conditions. More than likely, at least in the shorter term, people probably aren't going to spend $100 for a pair of Nike shoes. They're probably going to go look for, I don't know, whatever a cheaper pair might be, whether it's, I'm not even going to name a name. I don't even know, but some a pair of shoes that's cheaper than what Nike is, at least in the shorter term. So that might impact Nike's future revenues. However, that's where the EPS is going to come in. So their earnings per share is probably going to stay consistently higher because they have their their buyback program going on. So their bottom line is probably going to consistently hit, maybe 10%, 15% growth rate, assuming their net income doesn't decline in the future with the decline of shares. The thing I don't like about this buyback program, though, is that I believe right now they're buying back expensive shares. If the valuation that we got is $70 per share, the valuation we got in the last video was exactly the same price tag. It was about $70 and like 47 cents per share, something like that. So in my eyes right now, based on what we went through, they're buying back expensive shares, overpaying for their shares. Um, yes, they have the money to do it, which is fine, but as an investor though, I mean, why would you want to see them buy back expensive shares unless they have just no other idea, no other way of using that money? Because at the end of the day, you're paying for how this company is ran. If the company is not producing that well, I think you should put your money somewhere else, honestly. I mean, do what you want, but that's just what I see. That's my opinion, but that's kind of my take on Nike, really. So also, one thing we want to keep an eye on too is cash and cash equivalents and short-term investments was $8.8 billion. This is down $3.1 billion from last year because the cash generated by operations was more than offset by share repurchases, cash dividends, and CapEx. Not only are we buying back expensive shares, but we're pulling from the bank account to buy back more expensive shares. So Honestly, I think that's a little bit of a concern. Just maybe to keep a close eye on for sure. Because if they can't start building their cash back up, but they're just going to keep buying back more shares, they've clearly got $12 billion more left to burn, or sorry, buy, and then they've only got $8 billion, or sorry, they've only got like $5 billion left of cash now. So I don't know. It to me, it's for such an established company, I'm a bit disappointed in what they're doing, honestly. And maybe I'm completely wrong and I'm looking at things differently, but that's what I see, and this is not something that I'm gonna be ever, well, not ever, but this is something that I'm not interested in buying unless it pulls back to $50 a share, then I'll reassess the financials and dig deeper into those financials. But for now, just on the basic numbers, this is not a company that I would want to be too interested in purchasing. So, but that's my take on Nike. If this video was helpful for you, drop a like, subscribe, and leave a comment about it too. And if you think I missed something, also add that to the comments. That way, if I'm wrong or you think I'm wrong on something, just drop it down there and let other people know that here's my point or your opinion. So, but that's it for this video. We'll be back later with another stock analysis video.